CNBC-TV18, celebrating 16 years of business leadership.
Welcome back here with Markets Today, and we've had a decent session. Finally, bulls making a comeback after 6th straight day of losses. A short covering bounce, which is why the Nifty has pretty much ended at the highest point of the day. Lots of movement in commodities, stocks, all of them really bouncing back. Reliance Industries, Vedanta, Hindalco, these have been the shining stars in today's trading action. Not a bad day for mid-caps either. They've also performed pretty much in line, in tandem with what we've seen in frontliners today. Well, let's now get to that promised big exclusive. The Reserve Bank of India may come down hard on banks that are trying to misuse the powerful debt restructuring tool, the strategic debt restructuring tool, that is, to camouflage problems. And after CNBC-TV18 broke this story this afternoon, the PSU Bank Index actually took a hit of 1.5%. As we're telling you, that's the only big index that's actually ended in negative territory in an otherwise strong market. Now, we're learning exclusively that RBI may soon tweak the SDR guidelines to ensure that banks do not invoke it simply to avoid higher provisioning. Ritu Singh, who's been getting us those exclusive details, is now joining in with all the action. Ritu, what are you picking up from the central bank?
Survey, you would have noticed a flurry of activity from the banks in just the last couple of months, where as many as 9 SDR cases have been invoked by some of the country's largest lenders. But till this day, there has been no effective resolution, so to say. Sure, it may be early days to judge just yet whether SDR is an effective tool or not, but we understand from a source in the Reserve Bank of India that the RBI is keeping a very close tab on all of these SDR cases to ensure that there is no misuse by banks. Now, what could this misuse be? Under SDR, banks are allowed to classify the account that is restructured in this way as a standard account instead of an NPA, therefore taking lower provisions. So the RBI, to ensure that there are only genuine cases that are taking up, may tweak the rules in such a way that the banks that are unable to find new promoters in 18 months will have to retrospectively provide, keeping in mind the fact that that account could have been an NPA for all of those 18 months. So the message from the RBI is very clear. If there is pain, it has to be recognized, and there is no getting away from the fact that higher provisions will have to be made if books have to be cleared, especially in the light of the March 2017 deadline, where the Reserve Bank of India is targeting that there will be the much-awaited clean-up in the bank's balance sheets.
Okay, all right, Ritu. Thanks very much for that. That'll be an interesting development to track. But moving on, Jyoti Structures rallied 8% on news of a strategic debt restructuring. The company's board has in fact approved the reclassification of authorized capital and conversion of debt into equity.
Future consumer shares jumped over 8% after a 3.6% equity changed hands in 5 block deals. The promoters holding in the company stands at 43.58%, while institutions and non-institutions hold a little over 18.5% and 37.84% respectively.
Okay, and a number of other stocks were in the news today. Manglam joins in with a wrap of all the action. Manglam.
Well, from the stocks that were on our radar in today's trading session, we look at the hospital stocks. All of them surged in today's trading session, pumped in with some new life after the announcement of Narayana Healthcare IPO was made today. So look at all the hospital stocks surged in today's trading session, while Valiant Communications also gained in today's trading session after it informed the exchanges that they've received product approval coming in from BHEL. Jute stocks also gained in today's trading session, Cheviot and Gloucester, after the CCEA has extended the impetus coming in for jute companies. In fact, we also spoke to the management of Cheviot, and they indicated that this policy provides protection to the industry, and they've had a good first half. They are likely to have a good second half as well. Shipbuilding companies also gained in the later half of trade today after the CCEA announcements came out yesterday post markets, and the rail infra stocks also weren't far behind. We saw big gains coming in from Titagar Wagons and Texrail as well. And finally, some weak news for Dish TV. That one lost in trade today on the back of a Goldman Sachs report, where they reiterated a sell with a target price which is 25% lower than the current price, and they also believe that the average revenue per user growth will slow down going forward. Back to you.
All right, let's add one big stock to that list because as we can see, Maruti Suzuki might be looking at hiking prices across its models by as much as 20,000 rupees from January, citing higher input prices. That's going to be an additional stock to look out for in tomorrow's trading action. Now, we told you how large and mid caps have fared in today's trading action. Agam is here with a wrap of all the small cap details of the day. Agam.
Yes, some respite seen in the small cap index as well as a lot of these small cap counters which have seen a little bit of a rebound in today's day of trade after weakness that we've seen in the previous few sessions. When it comes to that, we have High-Tech Blast, Ajmera Realty standing out in the realty space, MIC Electronics, Sharon Biotech in good volumes, as well as the fact that it's gained as much as nearly 27% in the last 4 sessions. We're looking at good gains in Rico Auto, PIL, Uttam Galva, as well as Ador Welding. On the other hand, on the losing end, though there isn't much momentum towards the losers, we are looking at some amount of declines in Metals Forging, BL Kashyap, Talbros as well. Bal Pharma also showing some amount of weakness in today's day of trade, along with Subex, which has been under pressure for some time now. We are also looking at some cuts in Himadri Chemicals, and Joseph, of course, looking at about a profit booking after a good few sessions of trade. And that's what we have in terms of small cap sizzlers, at least for today.
Okay, all right, Agam. Thanks very much for that. But the primary market is buzzing with the 2 ongoing pharma and healthcare IPOs. As of last count, both Alkem as well as Dr. Lal's Pathlabs have seen subscription of over 30 times. Alkem Labs notched up total bids which are nearly 43 times the number of shares on offer, and Dr. Lal's Pathlabs saw a subscription of 32 times. And the next one to watch from the space will be Devi Shetty's hospital chain, Narayana Healthcare. All right, time now for some technical perspective then. We have Sudarshan Sakani who joins in. Well, Sudarshan, the market snapped that 6-day losing streak. What do you make of the market today?
Good evening. Markets had a good day today, and short positions were protected by a trailing stop at 78.50, and that stop was taken out, which means that the short positions actually made 150 points, and that's a very good profit for a 4 or 5 day trade. And especially a margined trade. But that's behind us. At this point, the markets are suggesting that maybe a short-term low is in place. We don't know yet. We'll know in the next few days. There is no trend in the market if the short-term low is in place, because either the markets are sideways or they are down. In any case, 1 day's rally does not change the market's trend from down to up. So because we are now uncertain about the trend, trading in the Nifty is not a very good idea. We should wait patiently. Either the Nifty will give us new patterns, or we'll wait till the new patterns emerge by themselves.
Okay, so what about individual stocks, Sudarshan? Any specific bets that you'd pick out for tomorrow?
Given today's reasonable environment for buying and for bullish, momentum, tomorrow can be considered as a buy day. Consider buying NTPC. NTPC is finding strong support at lower levels, and this support has led to a consolidation. That consolidation is on the verge of a breakout on the upside. So NTPC is a relatively low beta and therefore relatively safe stock to be in. Consider buying NTPC. Take modest profits. The targets are already available on your screen. Also, please follow the stop losses. If it doesn't work, it doesn't work.
Okay, on that note, we're going to wrap up this edition of Markets Today. Thanks for watching.
Have a good evening.
CNBC-TV18, celebrating 16 years of business leadership.